Dive into the world of finance with us as we explore the recent exploits of the financial titan, Berkshire Hathaway. The third quarter of the year has been generous to this behemoth, showcasing a whopping 41% increase in operating earnings. This translates to a hefty sum of $10.76 billion. The insurance business, a vital cog in the Berkshire Hathaway machine, has performed well, with both investment income and underwriting earnings showing significant improvement. However, things haven't been all rosy. The company's public investment portfolio experienced unrealized losses due to a market decline in September. But don't be alarmed. The market has since made a comeback and is poised for further appreciation. Despite its impressive performance, Berkshire Hathaway is considered undervalued compared to the market, trading at less than 20 times forward earnings and roughly 2 times forward sales. Plus, it's sitting on a substantial cash reserve of a staggering $157.2 billion. Yes, you heard that right. As we see, Berkshire Hathaway remains a strong player in the financial arena, poised for growth and ready to weather any storm. Let's dissect the Q3 earnings of Berkshire Hathaway and what it means for the financial landscape. Berkshire Hathaway, the financial powerhouse led by none other than Warren Buffett, recently published its third quarter earnings. Some key developments have emerged that warrant our attention. One of these is the company's hint at potentially increasing its stake in Chevron. It seems like the energy sector continues to play a pivotal role in Berkshire's investment strategy. But that's not all. Berkshire appears to have stepped on the gas with its share buybacks this quarter. The company shelled out a whopping $1.05 billion on the share repurchases last quarter and is on track to invest over $1.5 billion this quarter. This move is a clear indication of the company's confidence in its intrinsic value. Another interesting development is related to Occidental Petroleum. Berkshire has confirmed that it will treat a portion of Occidental's profits as its own going forward. This strategic alliance could be a significant revenue and net income contributor for Berkshire Hathaway. However, it wasn't all smooth sailing. The company disclosed a $1 billion loss to its insurance business due to Hurricane Ian. But every cloud has a silver lining, right? The losses from the hurricane were offset by the positive impact of higher interest rates and a stronger US dollar on its operations. Despite the losses from Hurricane Ian, Berkshire Hathaway's strategic moves, like the potential increase in Chevron stock, the faster pace of share buybacks, and the treatment of Occidental Petroleum's profits, coupled with favorable macroeconomic factors such as higher interest rates and a stronger US dollar, have set it on a promising path. This, folks, is the financial prowess of Berkshire Hathaway. Berkshire Hathaway's influence doesn't stop at the traditional markets. Let's delve into its connection with the electric vehicle market, specifically BYD. This Chinese automaker, founded by Wang Chuanfu in 1995, started as a humble battery maker, but has since morphed into a formidable competitor to Tesla in the global electric vehicle arena. In the third quarter, BYD sold more than 431,000 electric vehicles, trailing Tesla's sales by a hair's breadth. Both companies have set ambitious targets to sell around 1.8 million electric vehicles by year-end. Now, you might be wondering about the link between Berkshire Hathaway and BYD. Well, back in 2008, Warren Buffett's Berkshire Hathaway bought a 10% stake in BYD for $232 million. This investment was made after Wang, in a display of confidence, drank BYD's battery fluid to demonstrate the company's commitment to green technology. Since then, BYD has diversified its business, from copying Japanese battery makers to producing gas-powered cars, and now focusing on cost-competitive plug-in hybrids and all-electric vehicles. As demand in China has declined, BYD has set its sights on the European and Southeast Asian markets, even planning an entry into the American market, political barriers notwithstanding. The company's name, initially devoid of any particular meaning, now stands for Build Your Dreams. Despite facing stiff competition and a slight decrease in Berkshire's stake, BYD continues to forge ahead. The company's executives, Wang and Stella Li, share a unique dynamic, with Wang focusing on product development and Li on business partnerships. Berkshire Hathaway's venture into the electric vehicle market showcases its foresight and adaptability in the ever-evolving world of finance. As we wrap up, let's touch on another financial phenomenon: the resurgence of banks. Goldman Sachs, a leading global investment banking, securities, and investment management firm, recently smashed earnings estimates. The bank reported a profit of 8.25 cents per share, a figure that surpassed analysts' predictions. This was not a solo performance. Other major players like JP Chase, Bank of America, and Wells Fargo have also reported strong earnings. What's driving this bank boom? A combination of factors. Rising interest rates, for one, which have been a boon to banks' profitability. Increased consumer spending and borrowing have also played a significant role, as consumers are feeling more confident and willing to spend. Additionally, banks are experiencing a widening net interest margin, which is the difference between the interest income generated by banks and the amount of interest paid out to their lenders. In this current financial climate, it seems that banks may be outperforming tech companies as market leaders, a trend worth keeping an eye on. As we see, the financial world is buzzing with activity. From Berkshire Hathaway's strategic moves to the resurgence of banks. Stay tuned for more insights, and don't forget to hit that subscribe button for more financial news and updates.